Happy Wednesday. Welcome back to Daily Profit Plan. Let's get the screen share up and running. We should be live on YouTube and we are live on Zoom. Screen share's up and running. Chat's open. Happy Taco Day. This is Taco Day 2026, apparently. Yep. So markets are up in a pretty big way. 2 week ceasefire market got stoked about it yesterday. And we're seeing about a 2.5 to 2.6% move to the upside. Globally, it's one of the biggest single day rallies we've seen since April 2025. So there it is. This is why it's hard to be a bear. I think this is a good opportunity, especially with the VIX. Look at the VIX levels all the way down to 20. Huge gap to the downside. We will really see what this volatility regime looks like, because if we hit these lows at 20, I'm just going to throw it out there. It's possible that we see some lows around 20 and we go right back up to 25 or right back up to 30 again. I'm not saying that I want to fade this move, but price action is price action. So I could see this market using this as an opportunity to, get out of those trapped longs. I will use this as an opportunity to take advantage of the lower VIX, see if there's some follow through. Taco means Trump always chickens out. So this has been something that was coined since last year because of what happened during Liberation Day, post-Liberation Day. Basically, a self-inflicted wound was pivoted hard from Trump's narrative. Same thing here in Iran. And he's been doing it, since all of last year. It was, I'm going to tariff. No, I'm not. I'm going to do this. No, I'm not. We're going to do this. No, we're not. Right. So I think the markets have grown accustomed to it, which is why they just kind of hang back and wait. And so Monday was a very low volume day coming off the holiday weekend. Markets yesterday didn't really do a whole lot. I mean, I just made the adjustment. We had a trading day yesterday. It was pretty calm. I mean, we opened up right here with a slight gap lower. By the end of the day, we had actually closed positive. But for expected move wise, it was nicely efficient. So we had two nice winners yesterday on daily profit play. Today we're looking at a pretty healthy gap to the upside. I'm showing 2.69% on futures. If you look at the CFD for the S&P, it's up 2.57%. So like I said, I mean, I want to be cautious of how much follow through there is. I think we still need to respect our levels. But this to me is an inefficient rally, and I could see this having some steam to it. But we have made lower highs here. We could run right up into resistance. We could clearly hit all-time highs. I just wouldn't be super excited about the markets thinking we're going to 73, 7,400. Like, there's a lot of damage that's been taking place. There's infrastructure that's been damaged. I don't think we just go down to like $60 oil. Sure, a 1 day off is great. A sigh of relief for 1 or 2 weeks. The market loves it. I think this is an opportunity to de-risk, de-leverage, take profits, and be better positioned for potentially what could be another, retest of these lows, which would not be fun, nor would it be pleasant. But would anybody be surprised? Right? Would anybody be surprised? I wouldn't be surprised. And also, it's an opportunity that, I mean, 20 VIX, I don't really love getting long at 20, but if we came down to like 17 VIX or 15 VIX, I'd probably get long VIX again. 20 seems like you could get long and probably have this thing, head back up to 25 for a near term gain. But I don't know. I don't want to spend lots of time like forcing trades on the VIX when it's like my entire portfolio is going to be benefiting a lot better from today's movement and all the green. So we have April expirations. We're going to have some May expirations. If we got some profits, we can take off the table with probability of profit looking pretty good. And the VIX at 20, I'm going to use this as an opportunity to close out trades, pull in some cash. And, right now it's like we've got a decent little bump in performance for April. So far, so good. If we can maintain this, that's a good pace. See if I can get, back over six figures for the year and continue to plug away. Okay, what else do we have for comments here? Thomas, I saw your email. Deanna, can you send? I've got an email that I can share with you, Thomas. If you're cool with that, I'll try to get a webinar recording for you. So, Deanna, I'll send you a message in Slack. See if we have a replay link for Thomas. He's asking for waterfall income. Okay, good stuff. Would it be a bad move to buy some big calls? It wouldn't be. I wouldn't pay a lot for it. That's all. I mean, a bull put spread on, or I guess bull call spread would be better than a bull put spread. I don't really want to own the VIX unless you're okay with that. I mean, we do have a decent regime. If I own the VIX, fine, but I think it's going to be something. Just trade the option. It's a defined risk trade. That's all. Okay. I'm staying in cash more than usual until we know the craziness is over. Well, Walter, we probably won't know that's going to be over until when 2028. It's hard to know. I mean, look, at the end of the day, price action has to tell us what to do. This is a nice, relief rally. That's what I'm using it for. If I'm not mistaken, I saw the plus minus on the day at like 94, which I know it's typically an overshoot. We're seeing some big disparities between Tasty Trade and Thinkorswim. I'm sure there's some upside today. This is not the day that I want to say there's no way it can go higher. It probably can. This is also the day that say there's no way it can go down. It could. So I think we just have to play the market for what it is. We're probably going to have some positive drift. Will probably be a positive gamma. I had posted a couple of levels like 6,700 and 6,400 were key levels this week. We have FOMC this afternoon. We have CPI. I mean, all this could be very short lived if the market doesn't like the readings that it gets on inflation this week, right? We have PCE tomorrow and CPI on Friday. We have the Fed today, which might be a bit of a non-event. It's FOMC minutes. It's not Powell. It's not a press conference. Not a rate decision. Just minutes. But inflation data, as far as core PCE comes out tomorrow, and US CPI on Friday. Headline CPI is looking to be back over 3% again. Again, the market may not like this at all, but I don't want to be the one to say like there's a top. Look, we pulled back about 10%. Okay. This is what happens if you've heard the saying, if you miss out on all the bad days, you miss out on all the good days type thing. Like there's no way to avoid like all the good with the bad. Typically the best performing days come off of really, really bad days. And so this, downside move, what's interesting about 2026 is that a lot of the great days are, I mean, this is what we saw for the last several months is we had, the stronger moves to the upside, and then it was slow, steady, fade it, right? Strong move to the upside, slow, steady, fade it. Strong move to the upside, slow, steady, fade it. We're seeing the same thing, strong day up, strong day up. What I'm curious of is this area going to be resistance and start to kind of top out and then slowly fade back down. If this gains traction, we might have one more pop up and then it slowly fades back down. It was not that long ago. I think it was right here when we had that big up day. That was a Monday tweet from Trump, and the market faded that for the rest of the week. So I'm just not getting overly excited. I think it's great to have green. I think it's great to have the market give us an opportunity to de-risk and deleverage. Cash is not a bad thing. Cash is a decent position right now. You can go risk-free cash at 4%. It's not a terrible position, right? But there's a lot of crazy stuff going on. Gold, for example, still catching a bit of a bid, off these lows. I'm still hanging in there with, several trades on GLD and GC for gold futures. Silver, another little pump to the upside off these recent lows. I did buy some silver right at these double bottom lows. And it's not like the bottom. I'm just saying like I use this as an opportunity to find support right at the 200-day moving average. So about $64 positions. Sold lots of premium on silver as well. So we'll see if this level holds, maybe comes back up to this area. All-time highs in silver would be fantastic. Not hold my breath at any time soon, but if we head back up to this area, then make a higher low, work our way back up, well, there's silver's chance to maybe come back to all-time highs. So looking for a bullish pattern there. Oil, big story. Market got overly excited. Okay. Gee, how about that for a technical play? Who remembers me talking about this for 3 weeks? High, low. Then you have your XABC pattern. Could this not have turned at a better technical spot just like gold did? Like, we're sitting here talking about, again, technicals matter. Price action matters. This was very textbook. Even for the crazy volatility and the uncertainty, fundamentally, it did exactly what I forecasted. Now, could I have shorted oil? Yes. Should I have shorted oil? Maybe. Defined risk, sure. But the nice part is it played out. And I said if oil's going down, we're probably going to see equities go up. And so a big move to the downside here. This is a 4-hour time frame, so a big move, but you couldn't ask for better technical play out. Gold did the exact same thing, right? Everyone's talking about this parabolic move in gold, but as soon as we put in this impulsive wave, it was a Gartley pattern, and it's cooperated. It's gone right back through the harmonic merge. Could this be a move back down towards equal lows, possibly even lower lows? Yeah, all the above, right? Could this also be coming back down to find support, and because it happened inefficiently, we start going back up again, and we just stick around $100, and then $100 becomes like the line in the sand of, oh my gosh, pressure on equities, or equities can be just fine because we're not at $100 barrel of oil again. So it's all great in the near term, but this is just good price action playing out. Okay. 94 on Tasty. Yeah, I've got a 94 this morning. Yeah, I saw this morning too. So let's go SPY or SPX here. 94 points. And again, this is probably an overshot. I mean, what is the Thinkorswim reading for this morning? It's probably 50 to 60. I'm going to take the higher of the two. I know that's an overkill, but I wouldn't be surprised. We've seen this actually a lot the last couple months. Is even though I'm taking the higher of the two, and this is significantly higher. I mean, you'd think with a 20 VIX, and again, some stuff it's like some correlations are really easy to use, but on a day like today when it's like all in and taco and whatever you want to call it, the markets could just run and pump and drift and nothing's going to stop it. Like if there's a day that there's literally no sellers, right? It's just drift, 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 drift. I don't want to fight the top, but if we have an expected move of 94, I'm going to try to sell premium 100 points higher or more, right? So a 20 VIX right now, I'll just go 20, we're 20 and change. So 21 VIX divided by 16, 1.31%. If we open and still go another 1.3%, okay, fine, right? We're at 66.16. So 1.31 times 66.16, there's an 86 point move in the day. Forecasted here for 94 points. Okay. I'm hoping that if I'm wide enough and high enough, I'll probably still play defense, but maybe go like 10 wide, 15 wide, 20 wide on my call spread, on my put spread, try to generate some premium this morning. Don't be surprised when the market opens up. This thing maybe corrects to like 50 points, 40 points, and it might be very, very low premium. But if I go wide enough and high enough and the market, kind of drifts like 9:30 to 10 o'clock or 9:30 to 10:30 directionally, if we can get filled for a couple dollars premium, play some defense and see if we're okay. Nope, it varies. So I usually that's why I do my expected move box gap adjusted. Okay, so this is to me this is always gap adjusted. 94. I move the expected box indicator value to 94. So this is going to open up with a pretty sizable gap to the upside. So from here up about, I mean, you've got to go. So these green lines get, this is yesterday, right? Yesterday's daily profit play. What did we need? Price was here. We stayed above my green lines. We stayed below my green lines. 2 for 2. Walked away with some bucks. Hooray. Okay. Did I waste money on defense? Yep. But was I glad to have it? Sure. So I ended up making about $165, $170 yesterday. So be it. I'll take it any day. And we'll try to do something again today. See if we can make a few bucks today as well. So I'll get rid of some of the chart alarms. All right, so we're going to have a pretty sizable gap. Like I said, we might even be pushing up into 6,800 today. Big gamma around 67. That's going to be breached, no problem. Let's say we go up about 2.6%. Okay, we're going to be opening up around 67.90. Again, putting it out there, there's going to be a massive gap right here. I said resistance-wise, 6,800 resistance. Okay, so gosh, I mean, to go up another 94 points on top of this, and because the gap adjusted, like, call me crazy, but gap adjusted, if we're opening up around 6,800, this is going to be kind of my measure move. So we're going to look at like 90 points to the downside. So my box will be something around this to the downside. Okay. So we'll have like a 65.20 put side, and we're going to have like a 6,800 plus. Well, no, it's probably 6,900 plus call side. And I'm going to try. I mean, especially for an iron condor, my goal on an iron condor trade is to safely call a top and or bottom for the day. Right? If you're trading on your condor, you are calling a top and a bottom for the day. And if we're going to have a lot of direction, up or down, I want that to be as safe as possible. Okay. So, I try to trade this as conservatively and as safely as possible for me to call those safe tops and bottoms. 94 points is going to be a massive adjustment when we have opening bell here in about 13 minutes. I don't know. Honestly, the deltas might be so low to start out the day, but I'm okay with that. I just think like this is one of those days where it might be. I mean, you'll probably have to remember April 8th, 2026, as the remainder of the time goes on. It's like, remember when we did a 2-week ceasefire and the market was up, 3.5%, 4% for the day. That might be the day, right? Last year, remember that the market was up over 9% for a day. That happened too. So just saying, like, markets can do wild and crazy things. And today could be one of those wild and crazy days. So, we have to also ask ourselves, it's like, okay, we're going to open way up here. Should we just sell puts and hope the market keeps going higher? I mean, how many gaps have we seen this year where the market gaps open and it does nothing for the day? Or it gaps lower and it goes nothing for nowhere for the day. We've seen that a lot. Like all of the flows are happening pre-market and then the day actually opens and it's a very quiet day. Again, I keep saying this. This is the secret to a lot of our success with daily profit play is implied volatility is greater than actual volatility, or the expected move is greater than the actual move. So if I'm expecting 94 points and I trade that and I get some decent premium around that, I've got to be okay. I'm hoping that we're okay. But I still think I approach this like any other day. Try to stay out of the way, find my levels, sell some premium, and off we go. Right? Because from a technical side, okay, if there's some follow through here, and here, I mean, think about this ceasefire. Would the market just go up all night, come into to this morning's trading, and then completely reverse? That's going to look terrible, right? I mean, that would be a true tell that price action is much more favoring bears, and this is a deleveraging, de-risking type position. But if there's follow through to today's pump, and there's follow through over the next 1 week or more, then the market is loving this stuff and it's going to try to stick to this narrative a little bit longer. I think this is an opportunity to de-risk and deleverage. If we get back to all-time highs, great. If we don't, not surprised. If we turn at 6,800, that's resistance because it was support, right? Go back to this chart here. Okay, go back to this chart. Look at where this key structure was. We had literally months of consolidation right there. And when that key structure broke, guess what? We're right back to it. So if this support is going to act as resistance, well, that might be also what happens in the near term. And I think that's going to be a tell that the bears are paying attention to these levels. Okay. But if the bulls continue to run this higher and hotter, well, this is no longer as resistant as it once was. And now we're talking resistance at all-time highs. Do I want to continue to short this and fade this? Not really. If I'm shorting the market, I want to short it way up here. Right? But, this as high and this is recent low, I think the market might just play around in here for a while. Okay. The narratives are going to change. This stuff on the ceasefire. Okay. What happens in 2 weeks? I don't know. Is this all put behind us and we've solved it? I don't know. It's like, I just don't think there's any certainties. I think use this for what it is. It's an opportunity to see some green. It's an opportunity to repair some positions. It's an opportunity where I just think you've got profits on the table. Don't let it sit. If I mean, literally today, it's like I'm looking at almost a 6-figure day just on P&L, and that's giving me a nice little comeback trade. I'm going to de-risk and deleverage and raise some more capital. I've managed to increase my cash position by about 500K in the last couple of weeks. That's great, right? That makes me feel a lot more comfortable, confident where we're going, for bigger and better opportunities and staying safe, limiting some of the exposure. Okay. All right. Press conference 1 p.m. Eastern time. Yeah, I mean that's fine. I think the market kind of ran with it on. I don't know. I don't think. Look, I mean, I think at this point Trump got what he wanted. I don't think his narrative is going to shift back to like, let's see the markets, move on bad news. So I think he's going to try to continue to fan the flame for this good stuff, good stuff, good stuff. We get all figured out. It's the best thing ever. It's the greatest regime shift ever. We're in whatever. Pat yourself on the back. But I'm just saying, buckle up. This market is clearly excited for up days, but the truth is a good strong up day. If it stalls and starts to fade with consistency to the downside, then it shows us that the bears are still very interested in driving this market lower. And this is just a wave. This would be down. This would be that pump back up. These are those aggressive reflexive rallies that happen when you sell the rally. It's that type of move that happens because it goes down steady, rips up aggressively, and then if this rolls back over, that's the pain that nobody really loves. But it's like, how is that even possible? Right? But this is the de-risking and deleveraging that we should take advantage of. Doesn't mean I want to be short. I mean, can you imagine trying to be a bear right now? It feels impossible to be a bear. I saw somebody post a meme yesterday. It was just like, FUK your puts. It was Harris Kupperman. He's like, I use AI to make memes. He's a big like hater of AI and stuff, and just says that the capex spending is outrageous, which in part it is, but I think it's also an open checkbook. And if you're not talking AI, you're not getting any funding. So you play the game in Silicon Valley, and that's the direction that the world's going. Let's see here. Inflation still an issue. Yep, it all is. It all is. So, I think the tail risk on either side is still good, but we have seen lots of opportunities where the market can blow us out one way or the other. I talked about this last week. I think when I was on Build a Trade with Nate and Kane, I'm like, I've been so surprised to see that a lot of the crazier days have been more so to the upside than they had the downside. We've seen like pretty contained, like, oh, the market's down 2% today. That's a big sell off. The market's down 3% today. That's a big sell off. But we've also seen the 2.5 to 3% up days, and that's and all of a sudden it like doesn't fit my math, where it's like the VIX was this and it went, half of 1% higher than the VIX calculation, which is insane, right? If the VIX is going down, we shouldn't see the markets breaching. We shouldn't see the markets breaching necessarily these volatility managed levels. But it is like the risk to the upside is just as wild as risk to the downside. So we just have to place a trade. So here's what I know what's going to happen this morning. My expected move is way higher on Tasty Trade than it likely is on Thinkorswim. That's going to seem way out of the money right now. Okay. I will probably have to look at a trade this morning. The deltas will be so low that it's going to seem like we'll never even get filled on a trade that we want. I'm still going to place my trade. I'm still going to pace my levels. I'm still going to look at defense. It's going to be all about pending orders. Okay. Because what I don't want to do is see opening bell change from a 94 plus or minus to like a 50 plus or minus, and then say that the 50 points is safe. I would say there's just as much risk to a big reversal today with FOMC, maybe FOMC minutes, not Powell or anything with a press conference, but there's just as much noise and risk with a reversal type move today, where we go up a ton, have this huge move to the upside, and then the market like limps in. Or we just have like this opening bell and more positive flow, positive gamma to the upside, and 50, 60, 70 points to the upside is reachable. I want to be trading this expected move at 90 plus points. Okay. Because already, by the way, I mean, a 2% move from the close yesterday, if we're at 2.5, 2.6, we're already up, right? We're already up like 160 some points. So this 94, the way that I look at it is this 94 is on top of the 160 points we've already moved overnight. Okay. So I'm not going to go crazy aggressive on deltas. I know it's tempting to say like, well, the market's up today, I should just go higher deltas on the puts, right? I'll do a 20 put delta, or I'll do a 20 delta put, and I'll get more premium. I don't know. I kind of want to just stay out of the way of all of it. Okay, because if we have a nasty reversal day because we're sitting around 6,800, I see this support. Past support becomes resistance. If the market fades today's move, it's going to tell us who's in control. If the market fades today's move, the market doesn't care about this taco stuff. This is a one-time Trump bump, and the market's going to be pricing in de-risking, deleveraging. If that doesn't happen today, then this 1 to 2 week ceasefire has some legs to it. Is that enough to get us back to all-time highs? Sure, maybe. Don't fight it. But day after day, we have to just continue to put on our process and trade. Okay? All right, so all-time highs here at 7,001. We've got the NVIDIA sell-off candle. That's still, I'm still mindful of that. 64 to 6,500 gamma. Those are big levels. Let me find our strikes. Look at this thing. Okay, we're going to be gapping higher by about 2.6%, now 2.7%. So we're already gapping up. This is nuts, man. We're already gapping up into all of these gamma levels here. Okay, so it's tempting to say we should just short this, right? But what I'm going to do is use this gap adjustment, go to my plus, 90, 95, 100 points, see if there's any premium up there, and try to collect some premium. On the put side, we've had a decent amount of skew in the market where the put premium is higher. It's going to be low delta today. I feel like we're going to be trading like a 3 delta, 2 delta on the put side. And, I'll probably go 15 wide or 20 wide and just stay as far out of the way as I can. If you wanted to do something more mechanical, like when the market opens, look at your deltas, go 10 delta, try to trade your, 5 or 10 wide maximum and just kind of keep it very systematic on daily profit play. I'm going to go a little bit wider, a little bit farther out of the money and just play it pretty safe. I think this market is opening up with a lot of, risk either direction. And I wouldn't be surprised to see, either the market does absolutely nothing today because we already had all the movement, with this opening bell gap, or it opens up, it has, some quick direction, and it's just waiting for the Fed, and it's going to use it as a catalyst to do something else. So, like I said, our job is, we're trading on a daily profit play type strategy. We're essentially calling tops and bottoms every single day. So I want it to be as safe as possible. Okay, as safe as possible. Let's see here. Iran is still bombing Israel. Yep. Bellwether stock index you refer to looking for direction. Um, Not really. You can follow futures. Futures kind of leads the way. If you ask me, follow futures, follow SPX 500 because that's a 24-hour CFD. So if you want like good structure, if futures are up and SPX CFD is up, that's a good sense of market direction as we come into the day. Obviously with my zero DT flows, this has changed the game the last couple of years. Watching to see where like big levels are sitting. So we'll get a pre-market read. Let me go my live GEX levels here. So we should finally see a lot of positive gamma. So today coming into April 8th, it's all positive. There's a huge gap to the upside. So all this gamma here, this is pretty wild and crazy. Could this be contained at all around like 6,800? Well, we're kind of opening up there anyway. So we'll see. If we just keep grinding higher, it's like 6,800 can become 6,825, 6,850. There's not really much more to those levels. It's also difficult to see it. This is what I'm saying on the VIX. If the VIX is at 20, we shouldn't really see like a 3.5, 4% move on the day. But it could also be one of those crazy outliers where it's like, can you believe the market was up 3.5, 4% today and the VIX was at 20? That doesn't make any sense. That math is broken. But I respect the upside risk that this market has given us and shown us for the last couple of years. So look at this thing. Again, gapping up and still pumping. So we're going to have a quick change right now that, I'm showing 100 points. Now it's down to 40. Look at that. Like that. So I'm going to go back to my expected move box. So I've got the 6850 area, which is gap adjusted. Okay. Getting profits on some of my pinch point trades. HEI just filled for $6. That's a pinch point winner. Okay. So we opened up around 6750. I've got a 6750 on dynamic trends. So a couple verified data feeds. 6850 is my expected move. See if we can sell some premium. I'm not messing around here. Let's go to like 60, I don't know, 68, 60, maybe 68, 75-ish. Okay. So 60. This is a 6-7 delta. So if I went like SPX April 8th, this is crazy. Even the call side, look at the strikes. You've got 10 wide strikes today. We don't even have the precision to trade that we want because the market wasn't even expecting these option contracts. So 68.50. I'm going to go like the 70 by 80, 75 by 90. God, those credits are terrible, by the way. The most disappointing thing is this might be just a challenging day to trade because the gaps are so large and the premium is so low delta is going to be a mixed bag. Let me go back down to my expected move bottom, which look at how wide this thing is, man. This 94, and again, it's adjusted to like 40 points right now. But can I do like I don't know, I'm just going to try to get the 70, 80. I'll try this. That risk would be, let me try to get like $2.50 out of that. That's still a lot of risk. That's pretty low delta. Doesn't really give me a lot of defense to work with. I'm going to cancel that for a second. Let's look at puts first. Expect to move boxes all the way down 65.22. Ugh. It's so far down here. 65.20. So that's 15 wide at a 1 delta. God damn. This is brutal. I'm just, there's no good trade right now if I'm using my expected move box. Okay. So 15 wide below my expected move box. 15 wide, I can go 70 to 90 or 75 by 90. Okay. If this trade can fill for $1.50, I'll take it. To me, I'm setting it above my expected move box, below my expected move box, allowing the market to give us some sense of direction. These are very, very low deltas. I'll take $1.50 on this if I can get it. So pending order, and it's traded for 20 cents. I mean, the probability of this thing filling today is pretty low. We have FOMC minutes this afternoon at 1 p.m. or 2. I think it's 2 p.m. Eastern time. It should be 2 p.m. Eastern time. So 2 p.m. Eastern time, FOMC minutes. All low impact stuff today. Somebody's mentioned in the chat that Trump is on the calendar for 1 p.m. Okay, fine. I'm sure he's just going to pat himself on the back for what has happened overnight. So again, like I said, not forcing a trade. I'm going to use and respect the expected move, which is way higher than what it shows right now. Right now, the adjustment is about 36 points. I'm going to keep it at 90 plus points away. So I'm going way up here towards the 75 by 90. That's going to be my bear call spread. And my bull put spread is in the expected move box. I could probably tighten this up a little bit. Gap fill at 6,600. I mean, let me try 66. Let me try this. Again, premium's probably still not going to be good and take worthy. So if I went 75 by 90, 75 by 90, and then I go below the 66 handle, which is a gap fill, we'd have to have a massive, massive reversal to fill this gap. But if I went 6,600, slightly higher premium, that's going to be a 3 delta, though. It's still just ridiculous. So even there, I mean, it's still 30. It's like, I'm not taking the trade. It's offering 30 cents. I want like $1.50. There's no way I'm going to take this trade. So I'm just going to keep this trade in and play it really, really, really safe and see if this thing gets up over $1. I'll take it safely over $1. I'm putting it in for a pending order to $1.50. Okay. All right. I'll post this for Telegram. And again, this might be a day the trade doesn't fill, and it might be best to direct my attention elsewhere, which is waterfall income for all of our stacked trades. We're probably going to show a lot of profit on these. VIX is low. Time is on our side. Our out of the money percentages have just increased a ton with this huge gap to the upside. So it might be a good time to de-risk and de-leverage some of those higher 6,000 plus positions. How many of you are in waterfall income with me? We have some trades at like the 6,400 handle, 6,300 handle, 6,200 handle. If those are showing some profit today, even if it's like 50% or more, it might be worth it to take that trade, take the winner, take the risk off the table, keep your strike prices as low as possible, because that's going to be the highest out of the money percentage for us. And those are like our May, June, July expirations. Yeah. So I think that's a good rule of thumb for today. It's like portfolio management day, right? This is a gift for the markets to stop the bleeding, de-risk, de-leverage, take some profits off the table, raise some cash, and be better positioned for, look, if we do have another leg lower, you don't want to be on the hook for that. And here's a good way to tell. If that 10% drawdown that we just saw in the S&P, if your performance was worse than that, right? If your exposure, if your 10% drawdown was down 10%, if your 10% drawdown of the markets were down 15, 20%, that's too levered, too high risk, too correlated. I would want to reduce that as much as possible, right? So, 10% drawdown in the S&P was down about 1.5 to 2% for me. I still want to de-risk and de-leverage. So that way, if we do make a fresh low, I'm not on the hook for, more pain and more points against me. Okay. All right. So markets, again, like kind of a little nudge to the upside, is just kind of stalling here. I'm not going to get into the way of this. I'm going to keep this pretty safe. Keep an eye on this $1.50. I'll put this in daily profit play right now. So pending order. This is extremely conservative, but respecting. I'm just typing this in chat for members. Respecting the plus minus 94 points on Tasty Trade this morning with the expected move box. So SPX, 4.8 expiration, 68.75, 68.90, 65.15, and 6,500. $1.50 credit. And I'd accept, $1 to $1.25 to $1.50 credit on this trade. Oops, but it's unlikely to fill without some additional direction today. Okay. I'm not doing it, Garrett. I mean, all that's asking for is, look, there's a reason that SPX showed 94 points pre-market. In my opinion, there's a reason. You have to remember, man, we're calling tops and bottoms every day. So I can make the adjustment, say, here's the deal. Let's do a 10 delta. Okay, here's a 10 wide 10 delta on the call side, and here's a 10 wide 10 delta on the put side. Okay. Now I can take this trade 10 wide for 90 cents. And I can just say, well, mechanically, I did a delta neutral iron condor. Great. This has nothing to do with the pre-market expected move. This has everything to do with the current adjustment to say the market's going to go maybe plus or minus 35 points for the rest of the day. I have no idea if this market is safe with this plus or minus. This market could continue to use this as a pump to the upside. There's a reason it said 94 this morning. Okay. The market was up yesterday and it still came into pre-market at 94 points. So I'm not going to make an adjustment and say like, well, I'll just, reduce it to an expected move box of 40 points. That 40 points has nothing to do with the pre-market. That is a change to this is what it shows me this morning. That's great if it works. But the safest way for me to trade the top and the bottom is to use all the context that I have before the market opens. Pre-market, what's the VIX at? Where are my extremes at? Where's my high and low? And just stay out of the way. If the day doesn't fill, I don't care. I'm annoyed that we don't have a better trade. It's obviously bothersome to be like, oh my gosh, 94 points and it adjusts to 40 at the open. I'm not gonna jump into the mess. Like this is a mosh pit. So if you jump in the middle, it's like I don't want to get pushed around here to plus minus 30. If you think that's a good trade, then do a freaking iron butterfly and trade a 40, 50 wide iron butterfly and see if it stays in the range. Right? Markets have barely moved. So if I did an iron fly this morning, let's see what a 70, let's go 50 wide. There's 50 wide right there. Let's go 60 wide. And then I'll sell the 80, go 50, 60 wide. That's 60. Let's go 60 there. So right there, I can do a 1-to-1 on the day, risk $2,400 to make $2,500 as long as price doesn't move more than about 36 points. Well, the plus minus is 36 on the day already. Right? So that's not a bad way to play the day. If you think it's going to be truly quiet, there's a great way to trade it. There's risk, but if the market stays within this plus minus, you got a lot of profit to show for it. But there's a lot more risk too. If I tighten this up, okay, I'm pulling in less premium. So anyway, I'm just not going to force a trade. It's that simple. This is a great day. This is a great day to de-risk, de-leverage. If I could sell more premium at the 68.50 zone, which I'd love to, even that's not offering a lot of premium right now. I mean, that's a 6 delta. If I went 10 wide and 10 wide, I'm getting 60 cents and I'm risking $3,000. Like that's a terrible trade. That can't be right. Oh, that's because one's 15 wide. Okay. Yeah, that's a terrible trade. So I'm just going to stick with my expected move box and keep it out of the way. If the market gives us a direction, fantastic. If it doesn't, okay, fine. The last thing I want to do is get bumped in a mosh pit, kind of get thrown around when the market, maybe it gives us 30, 40, 50 points of movement one way or the other. Okay. I mean, this is what's always crazy about these big gaps to the upside. The market could literally do this to the downside, and everyone's like, hey, look, the market's up today. And we watched it just give it all back, even though it's still positive, because as long as the market closes above this line, it's a positive day, right? I'm just not going to fight this stuff. I'm not going to do any protective flies unless I get filled on a daily profit play, Dave. Okay. So, like I said, I think it's better to turn our attention to some other positions. I want to take a look at waterfall income really quickly. Engineered options looking good as well for a full time profit. For participation trade was filled around the 662 handle. Right now, we're trading around 677. So, I mean, out of the money percentage looks pretty good going into next week. That's getting us through PCE and CPI this week. And then our expiration would be on Monday. Again, the big tell for this week is that if this big gap to the upside gets faded, then be on the lookout for technicals obeying, which is past support becomes resistance. The market bumps right up into it. And guess what? It might start fading. So, we need a couple more days to assess. We need to watch price action closely. We'll see what today ends up giving us. But I think that the safe trade for me is going to be, if I'm going to get something to trade, it's going to be up here out of the way, and it's going to be down here out of the way. And I know that seems way too conservative, and it probably is for the day. But if we see this market give us more upside or starts to fade hard, I don't know. Just keep me out of the way, because anything inside this plus or minus 40, I think is just, I mean, the market just moved 180 points. Plus 30, plus 40 by the end of the day. It's like, that's it. So, anyway, just trying to play it safe. All right. So let me go to waterfall income. Let's take a look at some trades. We have a whole stack of them. We got a lot of waterfall income trades running. We got some good profits. I mean, just on the day, it's like almost a 90K day. That's not a bad thing at all. So here are some waterfall trades. April, this trade is up 45 out of $50. Can I take the profit right now? I mean, am I really worried about the markets going back below 59.25? There's a 98% chance of profit on this trade by April 30th. We stay above 59.25. That's also a 10 wide profit trap. I'm going to keep this one alive and well. What I'm looking at deleting is, so this one's April 30th. This one's filled for a 50-cent trade as well. Again, max profit. So if I can pull like this trade for a 5-cent debit or a 5-cent debit, then I'll close it. Okay. I give away the profit trap opportunity. Do I think we're coming back in the next 22 days all the way back down to 61.50? Probably not. There's about a 5 or 6% chance of that happening. But take a look, right? Looks fine. But the ones I want to get rid of, probably this one. Right? This one's max profit at $1 plus the profit trap of 10. So I'm up, 55 or $60. My strike is 275. Our recent lows were 63.15. So that one could potentially be in jeopardy. This one, I did this during a build a trade. 64.40 is my strikes. This one's positive. I'm just going to get this one off the table. Give me 10, $20 in this trade. Get me out of this trade for break even or better. This is a build a trade. This is an official waterfall strategy too, I don't think. I think I did that with Nate and Kane. We were showcasing some waterfall income, so I actually did a trade together. Let me see if I can get this one for at least a small profit. This is one of the highest strikes that I have. So I want to get rid of this one because that's 64.40. We've been below that in the last 30 days. We've been below that by about 115 points, 120 points. So this one, give me a small win. Close. This shows 40. Let's go 45-cent debit. See if we can get out of this trade. We got filled in this thing for 55 cents. So as long as I can get out of here for 50 cents, even 55 is fine. I'll eat the commissions and stuff. But all right, I just got out of that one for 50 cents. So if you're in a build to trade with me, and I'm actually going to post this for Nate and Kane because I am out of this trade for that build a trade segment. That trade's been open for about 63 days. But a 55-cent credit, just close it out for a 50-cent debit. I take the small win and I basically remove the risk around the 6,400 handle. Okay, so now I'm just going to put this in Slack for build a trade. Build a trade. That was a 5:15 a.m. expiration, 6490, 6480, 6440, and 6425. Okay, so there's that. Taking that off the table. Let me go to these other strikes. 60. I mean, so fresh lows. I'm not really worried about this one. This one's 6150. 22 days out. There's about a 94% chance of profit. This one stays. There's also a profit trap. I still like that kind of 6150 area. Number one, we'd have to make fresh lows. We'd have to give all this rally back, which could obviously happen. But it's like we said, the pumps to the upside have been way faster to the slow, steady fades to the downside. Okay, so does it take time to recoup? I mean, this market has ripped, by the way, like 7 or 8%, has it not? Look at these recent lows we saw. I mean, this is the low around 63.17. Look at where we at today. From this low to this current price right now, the market's rallied 7.4%. So to give that back, I don't think that's going to come in one giant day, right? If it does happen, it's maybe in the 2-week window. What happens in 2 weeks with a ceasefire? I don't know. Okay. But I don't want to sit here and be silly to think like there's no way the market goes down. There's absolutely a chance the market goes back down. Okay. So don't be silly. Don't be greedy. Don't be complacent. Manage your portfolio. Take risk off the table. Take profits. You'll enjoy it. It makes trading a lot easier and certainly a lot less stressful, especially if the market's going to turn lower. I don't know if it is, but I'm not going to give the market a chance to find. I'm not going to give it a chance to find out and have me sit here and be like, oh, I should have taken profit. Okay. Yes, so that's what I'm looking for him right now. So Rob's asking, you still in June trades? Yes, I'm in a bunch of these trades. So this one for April 30th, this one looks pretty good. Again, if you want to, these are optional, but for waterfall income trades, we have like 13, 14, 15 positions running. We built up a decent amount of waterfall income inventory. So if I took profit off the table, it's not the end of the world. We get buying power back. Great. We're taking, 90% of the max profit here, 80 to 90% of the max profit here. Like those are fine. Take the wins. I don't mind the levels. This one, especially like the 59.25 level, I don't mind that at all. 61.50. I mean, 6,000 is where I think the markets could come back and test before we put in like a decent bottom. Okay. So I just want to be mindful of those. Like here's one in May 15th, 57.75. It's up 75 cents to the max $1.05. This one has a $10 profit trap. I'm going to let this one run. There's a 97% chance of profit on the trade. This one, 59.20. I'm going to let it run. This one, 62.75. Okay, but it's up $70 out of the max dollar. I don't mind getting rid of the risk on this trade. So if I take this one off the table, and I'm gonna write this stuff all down. So that build a trade, 64. I'm just gonna write these all down. So 64.90, 64.80, 64.40, 64.25. So that one is closed. This one here to eliminate the 62.75. Let me see if I can get out of this one for like 30 to 35 cents. This one's out 36 days. We have been just around these lows again. The low is 63.17. Okay, 63.17. So could it go to fresh lows and threaten this one in the next 36 days? Sure, maybe. Probably best to get this one off the table with risk. Okay, so I'll put this one on the docket for something to close. That's a 6,300 by 62.90 by 62.75 by 62.60. Okay, so can I close this one down for like 30 cents? I'll grab the 65 or $70 profit and walk away. I forfeit the remaining $10 profit trap. That's fine. But let me put this one in for like a 30-cent close. I'm going to go 30 cents, see if it'll fill. It's pending right now. Now, today and tomorrow, I mean, there's still a long ways to go to get to 62.75. And this trade's only open for another 30-some days. But I'd like to think that the ceasefire is going to keep things somewhat postured over the next 7 to 10 trading days. I could be wrong, and we'll find out, I guess, what inflation reads on PCE tomorrow and CPI on Friday. If the market absolutely hates it, then this pump is going to get faded hard with some nasty, nasty inflation. But this is what the administration is talking about right now. Even the Fed is talking about this. If these, knock-on effects for oil are short-lived, then inflation is still going to be, trending towards target. And this is a disruptive March reading, but they'll talk it down. And that's maybe what the Fed is here to do today, is do damage control from March's oil shock. Because that's what we're going to read tomorrow with PCE. That's what we're going to read on Friday with a headline CPI, not core CPI, because that excludes energy. But we'll see what the headline CPI reads, right? Because the core CPI for Friday is like a 2.7, and the headline was, or the forecast was like 2.5, or previous, I'm sorry, was 2.5. So the core is going to be much tighter gap between the core CPI, which excludes food and energy, and the headline. The headline is going to be like a 3.4% print. That's what the forecast is. So it could be a much higher print in headline inflation because of the oil shock in March. All right, so that trade I'm going to put for 30 cents to close. So that was $1 fill. Let me see if this will fill for 35 cents and I can just get out of the trade now while I'm talking about it. Not filling at 35. I'll just leave it at 30 then. I'll leave it at 30. It is at fresh lows, but I'm going to put that one in there to close some profit up. So that's the 62.75 right here. This one, that's the one I closed out for the build to trade. Here's another one, 62.50. We're up like 30 bucks out of the 50. I'm going to put this one at, if I can close it today for 20, that's fine. Let me see if this will close for, I'll close it at 25 cents. Try to take 50%. Not filling. Okay, I'll try this one. 62.75. This is a May 15th. So this is May 15. Okay, and then a May 15 weekly expiration. 62.75. 62.60, 62.50, and 62.30. That was an entry at 50 cents, trying to close it at 25. And that risk is 62.50. I don't want to see price in the next 37 days make fresh lows. That would be, risky. And so what I'm trying to do is, I think that technically 61.50 is a strong level to bounce off of. I think 6,000 is a very strong level to bounce off of. I'm trying to eliminate as much risk as I can in that 64, 63, 6,200 space. So if I can keep my risk and my strikes with profit traps and waterfall income above 61, I'm sorry, if I can eliminate the risk above 61.50, I'll keep anything, under 61.50. I'll keep anything under 6,000. I think those levels are very, very safe for a bounce if we're even going to see those levels tested. Okay. All right. So that one is pending. This one, 60.25 out to May. I've got a max profit here of about $1.60. I'm up $100 in this one. Let's see if this will close out for, this is 2 contracts. I like the strikes there. I think this one's pretty solid. I'll take the profit though. What's it trading for right now? 15 cents. Let me see. So I pulled in 80 cents. Give me a 20-cent debit on this one. Okay, that's the 60.25. So here's another one. Entered on this one for 80 cents. That expiration is May 29. So this is going to come out with a big alert to Waterfall Income members. So I'm going to type this up. It's going to be a lot to follow and track. This is why it's been important that we watch the tracker. We trade live every Monday together. So this is some serious tracking stuff here, okay? 60-40, 60-30, 60-40, 60-30, 60-25, and 60-10. I'm showing a fill of about 80 cents. Trying to close it out for 20. Pending. Hasn't filled yet. Pending. This one, 61.25. $150 max profit. I'm up 100. I don't mind taking it. Let me see if this will close us out. Current price. So this should be maybe closing out for 20 cents. I'll take 20 cents. So if I close out for a 25-cent debit, that would give me Let's see here, 50. I mean, that'd be $100. I'll take the $100 if I can get it. So let me see if I can close this one down for 25 cents debit. Okay. So another one. This is a May 29th again, 529, 6150, 6140, 6125, and 6110. So that trade filled. I'm trying to get out for 25 cents. It filled for 75 cents. Okay. Next up in June, I still have the June expirations, like I said. I do think that 6,000 level holds. This one, I'm looking at a max profit about $150. This one's a 10 wide profit trap as well. I might hang on to this one a little bit longer. I think into June, if we have a bottom, whether the bottom's already in or not, if we have a bottom, I will probably hang on to this one for looking for that bounce off the 6,000 handle. This one for June, 6140. I'm not going to close this one down for, $5 or $10. I'm going to let this one ride a little bit. So June expirations, I'll let those ride. This one, 6240. This one a little bit high. Let me get this one off the table. I'm going to take this one off. That's just because it's a higher strike. So 6240. This is a June 18th. 6260 by 6250 by 6240 and 6225. So I pulled in 75 cents. And it's showing a little bit of profit, not a ton. I mean, this is probably going to be like a 55 or 60 cent debit, but I'll take the profit, eliminate that 6240 risk. So let me see if I can get out of this one for a small winner. So let's see if we can get out for like 55, 60 cents debit. Just get out of this one for a small win. That would be about $30. All right, that one filled for 60 cents. Okay, so close. So 55, close out at 50. Closed. So these are all pending. That one's filled. All right. So I got that one off the table. That's a June 18th, 6240. That'd be my kind of line in the sand strike. This one all the way down to 59.25, not worried about it. This one, 5,900, June 30th, not worried about it. This one, 59.75 in June, not worried about it. This one, let's see here, 61.25 in June, not really worried about it. I mean, 75 cents, max profit, $150. I'll let this one marinate. And then the 62.60, this one, so I'm in for 2 contracts. I'm going to try to get out. Man, look at that fluctuation. Let's see if we can close this one. So that's July. I think it would be safe, but that's still like the higher risk, right? The higher levels. So let me see if I can get this one. I mean, I guess break even or better would be fine. I hate to let some of these trades go, but I'm going to, this is still out 100 days. Did we just take this one? No, this has been open for 65 days. We went out. Yeah, we did a lot of these trades like stacking in that weakness window. Chris is not hearing the voice. How's my AV, by the way? Nothing's changed. I should be live on YouTube, live on Zoom. Everyone's good? Okay. That comment's from YouTube. Also seeing a comment here. Hey, I'm a forex trader. Want to learn how to trade options? Great question. Let me get to that in a second. I'll share some links. I've got One Trade Mastery. I've got practical options. Got some foundation stuff. So if you want to send me an email, so that's for CC. Yeah. So that question that asked me about learning options, send me an email. chrispulverpub@gmail.com. chrispulverpub@gmail.com. I will share some links. One Trade Mastery is a free 70-minute session. Practical Options is $27 to get your beak wet and maybe dive into just the I'm not going to say the basics. It's like, look, if I can teach you how to trade direction, bullish or bearish, you can start trading options. Right? It's just getting you to understand, like, this is what we're trying to apply when it comes to trading options. Do I want to be directional? Do I want to be non-directional? I think that One Trade Mastery and the practical option stuff could be, very cost-effective ways to start building a foundation. Okay. And then, of course, join me, daily here. It's like we'll trade options and stuff every single day. All right. By the way, what a boring market, right? Markets moved pretty much nowhere. I'm watching this thing, live price 67.72. We've moved about, maybe 15 to 20 points since the open. That was off of like the first 5 minute candle. It's pretty much stuck inside that first candle for the day so far. So there could be an opening range breakout. Just keep an eye on that. See if markets break above 67.95. See if they break below 67.55. Maybe looking for an opening range breakout if you're looking to scalp or anything like that. All right, this trade here, let me try to get out of this one for a small winner. So 75 cents pulled in. As long as I can pull in less credit, there's a 60-cent debit. Let's try 60 cents here. Okay, let's try 65. Give me a small win. You fudge muffin. I'll try just to break even then. So 75 cents in, 70 cents exit. Just got out for 70 cents. That one's out, eliminating that risk. All right. That is one more here for July. That's a July 17th. So that was a 75-cent entry, 70-cent close, eliminating risk at the 62.60 handle. That was 62.90 and 62.75. That was a 15 wide profit trap, 62.60 and 62.40. Okay, so I have 1, 2, 3 trades in waterfall that I've closed for a small win. I'm going to keep the other ones running because they're either June expirations where I think the market can bottom around that 6150, 6,000 handle and get back up to those levels. We also have those profit traps as they come near to expiration. That's going to look a lot better for us and maybe land a profit trap or two, which would be fantastic. And then the rest is time is our friend. Okay. So I don't think that's a bad thing. And then we have the XSP trades that I did based on the expected move box. Let's see how that's looking today. This chunk, I'm going to add all these up right here. Some of these are stacked in together. So let me see just a quick P&L right now. If this adds up to something profitable right here. Because if it is, I might start closing these all down. This is 2 iron condors that I did. There's only 16 days left in the trade. Let me see what I pulled in. Credit wise, there's 16 days left in the trade. So if this is, so I'll start at the 4. Let me get this boxed in properly. So I'll start here at 431 down to this 223. And if that's positive by, let's say, $100 or so, I'll probably take the profit on that as well. That was one. So if you remember, this was maybe a month ago. So it says the trade's been open for 29 days. When I first built my expected move box, and I was showcasing that in these sessions, daily profit play. We use it every single day for the profit play. I also said you can, the 18-minute best practices video that I put out. If you buy the indicator from me for $20, I give you a 18-minute video of how I use it. This is what we did. We went out 45 days, did kind of a tasty 101 iron condor, and collected some premium on XSP, collected some premium on SPX. I'm gonna look at both these trades right now. So I've got minus 430, plus 464, minus 613, plus 654, plus 360, minus 223. I'm up $212 on these trades. I'm going to take the profit. I think the max profit was something around like 240 or 250. I'm going to take the profit. I'm up $212 out of a max 250. I'm just going to take it and move on. Do I think the market's going to settle back below 615? Probably not. But the 640, 635, we have been there. Okay, that's only 16 days out. I don't want to take the risk with the VIX being down. Probably the profit is now increased in my favor. I'm going to start trimming these down for winners. So the 720, 725 call side is going to go with, this is how it's going to close out. I'll take these 2 contracts here, close it with the 635, 640, and I'll close these all with 1 contract. So check this out. I'll close this position, change this one and this one to a 1 contract. So that was like $1. So the higher strikes on the put side was probably like $1.55 or so. Let me see if I can find this in Telegram. So 640. This channel, are you in Zoom yet? 640. I'm going to do expected move box. I'm just going to do bonus trades, I guess. I'll try to find a bunch of bonus trades here. Okay, bonus trades, FOMC, move box bonus trades. All right. NVIDIA. Trying to find all these bonus trades. What was that one? Okay. Trade summary, daily profit play. I'll find it. There we go. There we go. So I'm going to close out this trade here. So pulled in 695. This is probably showing like $300 to $400 profit already. So I'm going to look to close this one down. So that is SPX. April 24th is not that far away. So SPX 424, 7175 by 7200 and 6175 by 6150 for 695 credit. So I'll close that one down. And then the two that I just talked about in XSP right here, one pulled in for $1.15 and the other one, so $1.15, and the other one I should have added in. It should be like the next day or two. What the heck? I know I put two trades in that expected move box. Maybe I didn't list both of them. Yeah, I listed the further out of the money ones. So anyway, let me go back to this. So 61.15. This is the safer of the two. So the one that I'm getting rid of is there's a 60 or a 640 and a 635 that I pulled in like $1.55 or $1.60 credit for. This one's now trading for like 120 bucks, 130 bucks. So I'm going to get out of this one for profit. I'll get out of this one for profit as well. And hopefully that's, overall about 75 to 80% of the max profit. And this is all done in very much like Tasty Trade 101 style. Go out 45 days, manage it at the halfway point, or take a decent chunk of profit, which right now with the VIX at a low spot, 20 is a much easier way to take this win. Okay. It's more capital efficient for me rather than holding out for an extra $20, $30 of profit. Just take the win and walk away. So right now, let's see if we can get out of this thing for like 35 to 40 cents. See if I can close this down for 35, not filling. I'm going to penny this thing up to try to get the mid price. 38 cents. Hopefully it fills at 40 or less. All right, 38 cents. So that was $1, probably about $1.55. Close it out for 38 cents. So not bad. That's about $117 winner there. And then I'll take the remainder, the 720, 725 calls, and the 615, 610. This was the $1.15. And right now this is trading for 14 cents debit. I'll try to get 1 penny lower if I can. I'll try to go at the mid price if I can. Just above the mid price. You butthole. I need it. So it's going to be less than 100 bucks. 16 cents. So $1.15. Close it out for 16 cents. So I made $99 on that one, and I made $117 on the other one. So 117 plus 99. So 216 bucks on those trades for XSP. So closing out those. So if you're in those bonus trades, I know that's bonus trade stuff. And I'm going to close out the SPX one as well. So SPX bonus trade. This should be based on like the expected move box. I think I labeled it in here. So SPX. Where did it close out? I think it already filled actually. See this right here? This already filled. So I got the 695 close out for $2. So that is 495 bucks. So not bad. So 216, 216 profit plus 400 and 495. That's not bad at all, man. Okay, so just made 711 bucks on those bonus trades. I'll take it. Let's add this in. So little bonus trade update. Try to find my little bonus trade thumbnail in here with all these other crazy thumbnails I built. So bonus trade update. When I built and showcased my expected move box about 29 days ago, I added some Tasty Trade 101 style 45 DTE iron condors. XSP was a entry for $1.55 credit and an entry for $1.15 credit. The $1.55 closed for 38 cents, closed for 16 cents. And XSP or SPX entry for $6.95 and closed for $2 debit. Net profit on the three positions. So we have $4.95 plus $117 plus 99, $711. And still about how many days of expiration were left on those trades? April 24th, so about 16 days, and still about 16 days remaining on the trades. Taking the win. Good stuff. Okay. So if you're in those bonus trades with me and using that expected move box, that's why we built it. That's why it works. You know, VIX was high. We traded this at like a 26 VIX, by the way. Went out of the money, traded like 10 deltas, you know, got a decent amount of premium for it, and happy to take the profit right now. I think the market, that's what it's good for right now, is VIX is low, out of the money percentages just increased. This is all good stuff. Taking the profit now. You know, my max profit, by the way, I mean, I'm leaving some money on the table, right? $6.95 plus $1.55 plus $1.15. My max profit is $9.65. Okay. Now I just made $7.11 out of $9.65. So I pulled out about 74% of max profit. But to me, it's more capital efficient. It's less risk for me to grab that extra couple $100. If the VIX goes up to 25 again, it's going to, you know, widen out those expected moves, and it might mean I have to hold on to it closer to expiration. So I'm not going to. I'm just going to take the profit now and move on. All right. So those are fun to get off the table. Taking some profits off on waterfall income. Yeah, this is all good. All right. What else? So I'll get a nice write-up going for waterfall income. 1, 2, 3, 4 pending orders to close. 1, 2, 3 close orders. What I'm trying to do on waterfall income is eliminate the risk. Anything above 6,200, anything above 6,150, I'm trying to eliminate that risk. Okay, so if we have like 6,200 strikes, 6,300 strikes, 6,400 strikes, I'm trying to get those off the table. Don't take losses on them. Break even or better, but get that risk off the table. That gives us more room for error. That still packs away all those profit traps. That frees up if I close out those 1, 2, 3, 4, 5, 6, 7. If I close out 7 waterfall income trades for winners, that's also going to free up, you know, several $1,000s in buying power. So this is all a good plan. All right. Okay. Trisha, did I send you a follow-up email? If you purchased the expected move box, I should have sent you a follow-up email. There would have been multiple links in there. You know, I give you either TradingView access or Thinkorswim download link, and there's a best practices link as well. It says like, you know, best practices video. It's like an 18-minute video. You can click on the link. Yeah, just check that. Check the email. Rob, I'll send this out through the alert section in your member portal. So look at your one-click trading alerts. I'll post these all out in waterfall income alerts. Okay, is a reverse iron condor trade profitable if it closes above or below the sell legs? Yes. So if you did a reverse iron condor, are you talking about today there, David? If you're looking at some type of direction today, I mean, is the probability of profit high? It's probably like 50 to 60% ish. Do I think we're going to get the market to stay? Depends on how big your dead zone is, to be honest. So if I look at SPX this morning, okay, I mean, the markets have gone essentially nowhere. So let's go on the call side. If we want to do a reverse iron condor, I do an in the money call spread and an in the money put spread. So let's say we're trading at 75. If I went like 60 by 85, something like that. I mean, I could get $6 in this trade. What do I need price to do? I need price to go basically 15 points lower, or I need it to go about 10 points higher. And my risk would be $400 to make $100. as long as price is greater than 67.85 or it's less than 67.60. So that's not a bad stab at the day. You just need direction. So I mean, going into a 25-point dead zone is not bad. This is what the market's anticipating for the rest of the day. FOMC could move it a little bit, but I don't think it's going to be a big event for FOMC. It's minutes only. It's not Powell. So I mean, there's risk. There's risk. That's it. Like it's a decent trade if there's direction. If the market is all gaps and no follow through, so we just have all this pre-market and we open up here and just go absolutely nowhere. I mean, that's the day, and it is what it is. So, and I'm sure that I've got some traders out there that are doing, standard daily profit play, and the market's gone nowhere for 45 minutes. It looks great right now. But like I said, I wasn't sure what we're going to face today. It's like I have seen this market give us blowout trades to the upside as well as, gaps up and fades the entire morning. I just played it very conservatively. It's fine. Still made good money yesterday. It's like I just didn't want to be in the way of something that was just market rips. But here's what we're at. We're right at resistance. 6750 to 6800 is pretty key resistance in the market. And so I do think that the important tell for today is that if this market is going to stall right here, okay, it's not by accident. Like I think the market is here for a reason. Obviously, it's using Trump as the catalyst and this 2-week ceasefire as the catalyst. But this past support, if this holds as resistance and this market fades this gap, it's telling us that the bears still care. So, I mean, if the market can get excited about something like, hey, inflation's not as bad as we thought, or it's transitory or whatever, then sure, maybe we can get greater than 6,800 and the market looks a little bit more postured to the upside to revisit highs again. But if the market is going to fade today's gap up, then the bears are still very much interested in, protecting this as a potential lower high, lower low. That's why I'm saying that like 6150, 6,000 area, to me, I want to see as a strong bounce candidate. Okay. So, I mean, on that note, here's what I'll say. And I'm going to just do a little bit of anticipation here. But if we can measure out, let's take a box tool. Let's measure our high to low. Okay. Let's say that today, this is the top. So this market that's about to make a lower high to lower low, let's say that this is the top. Okay. That's a symmetry move down to about 6,100, 6,112. So I'm going to make a note here, put a horizontal level, and I'm going to call that one corrective symmetry. So see if I can label this one text. So corrective symmetry, high low, and lower high to lower low. Type in a wire yes so that makes sense. So if this market is going to use this as a recent high, and this would be, we'll know this by the end of the week. If the market is fading this, this could be a high low, reflexive rally up, lower high, lower low to symmetry. Okay. Now, symmetry on the downside for that third leg could also get a bit messier, and we'll probably hit the 6,000 handle before the market's going to bounce again. And we'll have a whole new level of taco trading from there, because if Trump does all this stuff and pats himself in the back and the market still goes down to fresh lows, nobody's going to like it. Okay. This is why I keep saying I'm going to use this as an opportunity when the VIX is as low as it's been for weeks to de-risk, de-leverage, raise some more cash, take some profits, and just be better prepared for whatever the market throws at us. Look, it's easy money. If the market is up, it's easy money. If the market is down, I want it to hurt as little as possible. Does that make sense? That's my plan. That's portfolio management. All right. So I'll mark that here, corrective symmetry, and see if we get there. Waterfall income, let me get an update posted. Yep, 35% cash. That's cool. I'm sitting a little bit higher than that right now. I've pulled in over $546,000 in cash, so that's good over the last couple of weeks. So right now my cash position, cash position, so 2,546. I'm about 50% cash. That's pretty good. I was like 40% a couple weeks ago. I'm also going to look and see, how my ratio spreads are doing. Some of these positions might look pretty good. Let's go to one of my portfolio margin accounts, for example. So let's see here. I'm just going to look at some of my ratio spreads. I mean, again, like not super excited about this one. These are so far out of the money. I'd have to like Amex would have to drop like 50 to 60% for that to be a problem. Baidu, I mean, some of these, I just have so much time in some of these trades. Cracker Barrel, back above my strikes. Chipotle, hopefully getting called away. You know, if we can repair it to $40. Costco is over $1,000. I'm curious when Costco is going to give us a split. If they do a 10-to-1 split, that'd be awesome. I have a ratio spread of 500 by 460. I love that trade actually. 40 wide ratio spread. I'd own it at 420. If they do a split, I'd own Costco at $42 a share. I don't know if they're going to do a split. Maybe they don't. Chevron, 150 by 140 ratio spread. John Deere, 310 by 300 ratio spread. This one's up. It's like I've got $320 of profit. If it's over $250 to $275, I'll take the profit. The Dow, these are looking pretty good. Some of these ratio spreads I did. Right. So $250. It's just a quick income trade. It's up $150 right now. Probability of profit is pretty high, like 96%. I also don't mind owning some of these shares at like the 10, 12, 15% corrections from all-time highs. So this one should be fine. Then I closed at all my Qs positions. QQQ, I've got a 111. That one's going to be most likely fine. That's up 50%. SPY ratio spread here. This is a 111. So $10 wide plus the naked put. I mean, this actually is a great position. So this would be a project options edge trade. 680 by 670. That's a 10 wide profit trap. And we have the 592 naked put, which is looking very high probability out of the money, 95% that it doesn't test this in 51 days. My credit here is 303. I'm up 350. I actually can take a small bonus profit right now and get out of this trade. I think I'm going to do this. So I'm going to take this 111, see if I can close this down for this should be closing out for like a 45 to 50 cent credit. Let me see if this will fill. So I'm showing like 40 cents of extra credit. See if we get 45 cents extra credit. 44 extra credit. Okay, so that 303 just closed out for another 44 cents. So that's a good winner. I'm going to get that one off the table with the bonus profit. I mean, and again, if price was below 670, there's a potential like $10 trap in there. But if we're above 680, I get nothing for it other than 303. So I'm like, should I let that one ride a little bit? I'm not going to. I'm just going to take it off the chain, get the buying power back, raise more cash. All right, let me do this on my portfolio margin accounts. So let me check the SPY here. May 29, 111. So that trade, 301, trading for 340 and change right now. Like I said, it's tempting to leave it alone, but if there's a higher spike in volatility back to 25 or 30, it's gonna be more pain. And it's also a naked put at 592. I'm just gonna take the profit, take the bonus. So closing out here for hopefully a 45 cent credit. 45 cent credit. Nice. This one, just going to all my portfolio margin accounts. Close. Oops. Let me group this first. So 301, trading up for about 45 cents. Close it at, piece of candy. 48 not filling. Let's try 40. Let's try 48 cents. $47. All right, I guess I'll take 45. Okay, at 45 closing. Okay, this one, SPY-wise, I don't think I have anything. That's January. That is a hedge. That's a 111. That's defined risk. That one's good. Okay, this one should be good. 1, 2, 3. There's my group position 111. So 301 up 350. Take the profit. Give me that 46 cents. And they really just want to give me that 45, don't they? Okay, 44 cents profit. This one probably doesn't have it. Those are hedges and spreads. This one will have it. There's my May. 1, 2, 3. Give me 46. Son of a biscuit. I'll just keep trying for 45 cents. There we go. 45 cents getting filled, no problem. That's a hedge. This is the cash account. Those are hedges and spreads. This one, hedge and spread. Here's a portfolio margin. There we go. So I'm taking it now because of the bonus profit. Do I still own Tesla? Yes. I have Tesla shares. I have Tesla 111s. I have modified collar trades. I'm doing like I've got a lot of trades on Tesla. My strikes are like the 220, 210, 215 zone. I still own Tesla. I have shares. They're covered at like $500, and I'm just going to let that ride. I also took like a modified uh, ratio spread where I did. I take that back. It was like a 1-1-1. So I did a bear put spread plus a naked put, and I think I took that trade for like $3 credit, and it was closing for like $8 to $9 credit. So my max profit would have been about $1,300, and I made $1,100 on it. So yes, I have a lot of Tesla. That's my answer. I still like Tesla. I think it's still like an energy company. I think it's a tech company. It's not just an automaker. I know everyone's talking about Tesla as like, oh, they trying to sell the shares of Tesla to buy SpaceX. I'm like, I mean, SpaceX could be like 30% retail, and the IPO is a big deal, but people are going to pull from all sorts of places to fund it. If they want to go long SpaceX, then they're probably going to pull from Mag 7. Do I think Tesla is a bad play? No, I think Tesla's great. If you care about it like an energy stock, I mean, they should be making chips, batteries, gigafactories. It's a tech play in my opinion. Humanoids, right? Like robots and AI stuff. I mean, I think Tesla's all of those things. So it's a tech company, it's an energy company, in addition to, yes, they happen to make cars. So I think it's multifaceted. All right, let's close this down for 45 cents credit. 44 cents credit. Easy peasy. Come on, don't be stingy, Tasty. Give me some bonus credit. Okay. This also is going to help me raise some more capital as well, since I'm taking some of these naked puts off the table. Nice to do that with a little bonus profit. Grab an extra $50 for everybody. So hopefully 44 cents. Come on, man. There we go. 42 got filled. Just got to finesse it a little bit. 42 cents. 42 cents got filled. Okay, a couple more counts and we're good. These are hedges, 111s. That should be fine. Ratio spreads, those are looking pretty good. So this is a newer client account. See, I've got a hedge in here. Got a 111 that's good for $250. Got a ratio spread good for $500. Got another one good for $400. Got another one good for $200. Got another one good for $1,000. This one, yeah, just need some time in those. And then this one should have that. This one might have a May, but this is one of my recent client accounts as well. April 30th. Oh yeah, those are the waterfall strategies. I'm going to let those run. The April ones I'm not really worried about. Those are closer to expiration. Let's take most of that profit. May 29th. There we go. Let me get that May 29th. This is the one. Yep, that's a waterfall trade. Yeah, these are all lumps of 4 trades. So this is 1, 2, 3. That's a 1, 2, 1. That is a butterfly. That's a profit trap. That's a profit trap butterfly. 1, 2, 3, 4. That is a waterfall strategy 2. 1, 2, 3, 4. That's a strategy 2. Yeah, I'll let those ride. All right. So I just cleaned up all of my SPY. That was a 111. I do have a trade in the Dow, but I think I'm going to hang on to this one a little bit longer. So this one's a ratio spread, the 455 by 440. It's up about $157 out of the max 250. But the goal is if price comes down to threaten the lows, there's a $1,500 profit trap in addition to owning shares and repairing this thing. So I can hopefully see a bigger profit chunk. We'd have to be down to 425 on the Dow. So if I'm taking on any risk on the Dow, 425 is way down here. So I don't think it's going to be a threat necessarily. From current price to drop to 425, we'd have to fall 11 more percent. Anything can happen, obviously, but that'd be a pretty nasty spill. So we go from there. If this market is using this as a lower high to lower low, that puts me down to about 425. I'd flip it, I'd own it, I'd trade a symmetry game back to like 510, $5-10 a share, flip it for $1,000 and get out of the trade. Okay, so I'll hang on to that one a little bit longer, and also that's got to happen pretty soon. This expires May 15th, so that's 37 days out. So I'll hang on to those a little bit. What else? Just generated more cash, so now I'm at 261. I just pulled in over. Now I'm 50% cash, so 261 out of what 2610. So 2610 out of 2145, 2134, 5136. So now I'm just at about 50 to 51% cash. Good. So trying to free up some more buying power. Let the market do its thing. Off we go. All right. How many positions do you have? I don't even know. A lot. I mean, there's a lot of accounts that I'd look after. I don't even know. I just know that my goal is I go A to Z. I comb this stuff every single week. I go through my positions. I group them. I group them in Tasty Trade. It's pretty easy to organize. And when I take off one trade, I pretty much take them all off. So, I mean, I probably have several hundred positions open right now. Okay. Do I trade forex? Yes, I still trade forex. Forex is probably best for my afternoon sessions. I mean, I can take a look here, like dollar index. I saw somebody ask about dollar index. We're dropping, and I've said this all year. Dollar index to me is just a big range trade. So everyone's been talking about the death of the dollar. It's like, well, I've heard that since like 2005. Let me make this a little bit bigger. So we have key support down here. We have key resistance up here. The dollar's a range trade. Okay. Where things get, and these are my thoughts. If the dollar breaks lower, this is what Trump and company want, is a weaker dollar. Okay. I think that sucks to be an American having a weaker purchasing power. I think that absolutely sucks. That's debasement. That's why I want to be long gold and silver and Bitcoin. That sucks, right? But the breakout here, this is where I think the crowded trade offers some asymmetry. If the dollar breaks and goes higher, this is what nobody is expecting, by the way, is dollar strength. I think this is a good high reward to low risk trade, but I think the better trade would be buy it down here, right? Like if you want to scale in, it's like take a stab at the dollar here for one position, take a stab at the lows for two positions. If you're wrong, get out quickly. And let's say this is a 1% risk. But if you're right, this thing goes up to 1.5 to 1, 2 to 1. If it breaks out, you're talking like 3 to 4 to 1. I think that's a much more probable trade with a crowded short position to see the dollar actually rally. The problem is this is risk off if the dollar gets stronger, and it's risk on. I'm sorry, that's backwards. No, that's all right. So risk off if the dollar gets stronger, and it's risk on if the dollar gets weaker. So I think that the pressure is if the dollar gets stronger, equities are under a lot of pressure. If the dollar gets weaker, the markets are going to love it, own assets. Even though you're losing purchasing power and your dollar's getting debased, you still have risk assets like, the S&P's higher. But truthfully, I think the market's going to stay range bound until it's not. So if you really care about this stuff, buy low and sell high. Sell high and buy low and pay attention to the range. That to me is where the dollar's going. You know, it's just a big support resistance area. Let's talk oil really quickly. Where is oil? We're at 95. That Gartley pattern is playing out really nicely. One thing to watch, I mean, just on the technical side, we had such a fast drop in oil here. Look what's happening. We're bouncing right back at the 200-day moving average. There's a low. There's a low. Is this a higher low? Maybe. Right? Is this a structure pattern that oil's trying to set up a lower high? Maybe. Maybe oil does end up coming back down. But I still think there's going to be something reflexive in that to eat into this recent inefficiency because it dropped so far so fast. Okay. But keep an eye on your energy stuff. This is why I was taking profit. Look at these. Okay. I mean, this is testing like a 100-day moving average. Do I want to get long XLE? No, I've got naked puts all the way down here at like 45 to 50 bucks. XOP, same thing. It's like, look at this. It's up on the day. It just had a huge gap to the downside with this news. XLF is financials. I mean, we're probably getting a sector lift across the board. Industrials. I mean, look at that big gap in industrials. Big gap in industrials. Basic materials, gap up. Tech, gap up. This is another one you want to be cautious of on the correction. Is this market could be pricing in lower valuations and earnings compressions. So if this is tech, kind of orderly, does tech make fresh lows? Mag sevens? Like I just how many of you trust this rally? I guess that's my question. How many of you trust this rally? Like sustained, this rally's going to all-time highs. We're getting there in no time. How many of you trust that rally? Like 10 out of 10, this is the best rally we're going to see all year. Or I'm cautious. I think this is a nice little pump. I think this is a way to de-risk, de-leverage. I think we're going to still struggle. 2026 has been a wild and crazy market, right? Lots of highs, lots of lows, lots of defense. We're making, engineered options, for example, 12 out of 13 weeks, 12 out of 13 like trades we've taken as a group, we've won because we've been playing defense. That is the key to that classroom is we have to respect that we're trading the ranges in those income grids. So I'm seeing a lot of people, not me, dead cat bounce, nothing, taking profits when I can, place to take profit. That's what I think too. That's what I'm doing. So I don't trust that this market has really what it takes to get back to all-time highs with much conviction. You got to give Trump and company credit for pumping this thing higher. But I am telling you, like this entire decline, I said, if we get a rally, this is a chance for those trapped longs to get out of trouble. Get out of trouble. If they get out of trouble, what better position to do it than right back here at past support becoming resistance, right back here at a nice 7 to 8% rally. You've got lower VIX. It's one of the lowest VIX readings we've seen in weeks. This is encouraging, but I do not think this market is going to be, and again, it could be slow and steady to the downside versus like, oh, but it's up today and it's down tomorrow. But we do have some interesting catalysts coming Thursday, Friday. We're also in the heat of earnings season. So this is going to be a lot of back and forth stuff, right? If earnings are decent, earnings are beating expectations. Remember, the bar's been lowered pretty substantially since we saw this correction. This correction has lowered the bar on earnings. So markets obviously want to see good earnings. And also this ceasefire is temporary, right? This is not a permanent solution. This is a 10-point agreement. This is a 2-week ceasefire. What happens in 2 weeks? I don't know. But if this market is going to run with this as a top and it's going to start giving some of it back, the bulls and bears will have those decision points where it's like, well, what happens in this cluster? We have support. What happens here? 6,400, 6,700, big gamma for the week. Okay. Do you remember me talking about this at the beginning of April? That April 1st, we talked about the quarterly JP Morgan collar trade. It was actually crazy simple. It was 7,000 on the upside and it was 6,000 on the downside. And anything in between is fair game for these markets to move around. So that's how like wide the expectations are. Like, yeah, we can get back to 7,000, but we can also go down to 6,000. Okay. All right. Let's see here. Do you see the indexes gradually going lower, going back to all-time highs? I think we have to wait and see for the next couple of days. If today's pump to the upside is going to be faded by Friday, I don't have a lot of hope that this is going to be another rally. I think this pump, if the market takes this as a way to fade this back down, I think the bears have clearly shown that they're in more control here, and the bulls have had their chance to get out of trouble and de-risk, de-leverage, and this market might be, fighting tooth and nail, but still ultimately trying to make its way to fresh lows. Okay, that's why I also measured symmetry right here. Because if we go high, low, lower high, lower low, I want to be ready to scoop up some dips there for some defined risk trades. Okay. If I'm wrong and this market drifts higher, great. I'll smile. We'll have more green. We'll have more red, or we'll have more green. We'll have more profits. We'll have more cash. We'll decide what to do with it. But I don't think this is a bull market. I think this market, if anything, is fighting with the idea of dispersion. Um, I think it's interesting. Like this, whatever the purpose is for this Iran conflict, um, I don't know how this gets us to all-time highs with tons of conviction, especially if it's temporary. Ceasefire for 2 weeks is temporary, right? If it was, we're done, it's over, then yes, I could justify the market getting back to all-time highs with some momentum. But a 2-week ceasefire is temporary resolution that the market's going to have to then deal with in 10 to 14 days. And we'll see what price looks like from there. Okay. Somebody says, who will go into this weekend long? I don't know. I mean, you're probably seeing all sorts of crazy stuff. If you look at like, any type of like cheddar flow or unusual whales, any type of those sweet positions. If you're looking at SPY, look, I'll give you some big numbers here. Let's look at April. Let me go Gex here. Let's go to the monthly April. So April 17th is the monthly. Okay. Let's go out to monthly SPX. Let's see where the big levels are at. Notice how there's pretty much nothing above 6,800. Nothing. Above 68, it is minimal positioning. Okay. But there is 6,500 down here. Okay. There's 6,400 down here. And then there's this big 6,000 JP Morgan collar trade. Is that the magnetic pull? I don't know. Right. Is that the magnetic pull? Maybe. Right. But that's also where hedge flows will position as far as market maker go. I think the market bounces aggressively off of 6,000 to the upside. I think we have a reflexive rally from there. But this market's probably going to be pinned and trapped between about 7,000 on the upside and 6,000 on the downside. That's a lot of space to watch the market go back and forth. This is why the nice part is for daily profit play is we can just sit here and approach with good plans every single day. Let's try to make some bucks every single day. Right? So AGD says we're in a bear market. No, we're not necessarily in anything. I think this is a dispersion market. I think this is the market's way of trying to get rid of the bad and keep the good. But I think that the amount of disruption that's going to happen to the next like 1 to 3 years, like 1 to 3 years, 1 to 5 years, I don't think anybody with high conviction can tell me what the best performing stock is going to be in the next 5 years. Nobody. I think if we're lucky, we're still at all-time highs in the next 3 to 5 years. But I think that all-time high is probably going to be dealt with some type of like 15, 20+% correction before we get it. I think, and that's what 2026 is going to be very interesting. Is like Trump with midterms can't really afford to let the market go down more than it already has. This little organized dispersion trade and him jawboning and talking up this stuff, if he lets this slip to fresh lows again and we all of a sudden face a 15% correction, I don't know how you can jawbone your way through a 15 to 20% correction and get this market back to all-time highs. So I think he's just, basically sealing his fate in midterms if we are sitting with a wealth effect of 10, 15, 20% drawdowns and going into midterms with like limited, bragging rights on the scorecard. Stock market is a scorecard piece, right? And does it feel like the bottom of the K is getting helped? I mean, you give people what? You give people help on their taxes for the big beautiful bill. You send out, the proposal for a $1,000 to $1,500 check. Like, the fuck does that cover? Covers like mortgages for a month, partial mortgages. Like, that doesn't give everybody a month expenses. That you're not going to help that many people. It's a good effort, but who pays for that? Right? We sent checks in 2020, and what happened? The world went nuts, and we went to hyperinflation mode. So I just think this kitchen sink approach is going to be insane. It's going to be a wild market, but it's not a bear market. It's not a bull market. I think this is a dispersion trade that you have to navigate, which is why I am raising capital and cash to have dry powder. I'm keeping a lot of my strikes out of the way. Okay. I built this workspace for some of my clients here. This is some of my positions that I have. So, the SPY trades, let's go down to, SPY. So my exposure is if price comes below this level, I'm willing to own some shares. If price comes all the way down here, I'm willing to own some shares. That's it. If I come down to The Qs. Where are my Qs at? Or the Dow. The Dow. Okay, this is the one that I just talked about. If we're down below 440, my ownership price is 425. I'm gladly going to own some shares there. That would be just an easy repair trade. 425. Market will be down over 15.5%. I'll repair it for maybe $5 to $10 a share. Grab 500,000 bucks. Don't own it very long. If I'm going to own the Dow, I'm owning it way down here below April 2025 lows. Okay, I know one off the top of my head is American Express. My threat level is all the way down here to 150. The probability of profit is very, very high. The chance of this thing falling 50 to 60% is very low. MasterCard is the other one. Okay, same thing down here. The risk for me is prices have to drop to 290. It's all the way up to 509. It's like we have to have a awful bear market for me to really take on any real risk, but it's the volatility risk that I have right now. As the probability cones widen, okay, yes, I have some potential risk with open naked put positions, but they are so far out of the money. The probability of profit is 95% or better. And as long as this is the expected move, let's say this is the expected move in black, but let's say that the actual is this, right? What does that mean for my positions? What does that mean for my positions? It means I make money because I'm selling premium further out than what the market's actually capable of moving. So expected is greater than actual, which means I can make money. Implied is greater than realized, I can make money. That's where a lot of my positions are right now. Okay. All right. And through all this, yes, we have to navigate oil. So, oil, I mean, one thing we've got to be very thankful of, but also aware of is everyone was so worried about inflation in 2022. Guess where oil was? We had the oil shock in 2022 at what? 120 bucks a barrel, right? This was 2022. We had COVID. We had the crazy recovery when oil was essentially negative and it went all the way back up to $130 a barrel. Okay. While inflation was going from 9% down to 3%, oil went from 130 back down here to this range. Okay. What's nerve-wracking about right now is now the inflation genie is out of the bottle. And so for us to jawbone oil and jawbone inflation and say, oh, it's transitory, this is a one-time shock. Do you know how much damage has been done to this infrastructure to pump oil and provide all the ample supply? Like, we have disrupted the entire global supply chain. That cannot be easy to fix. And assuming that oil is going to go back to $70, I think is crazy. Do I think it's going to $200 a barrel? I don't think so. Not without a ton of problems. I mean, we will look oil. If oil goes to $150 or higher, I don't know how we're not going to have a recession. I think it's going to be impossible to not have a recession. And it might be like a full-blown crisis. So, I mean, clearly there's a pain point around the 120 handle. And we'll see if it's just going to be, maybe it stays between about $80 and $100, $80, $120. And it's just a big, ugly, volatile range. Look what it did here. It spiked, it pulled back, and it came right back to the highs and failed, and it worked its way down. It took time. But oil is definitely a factor that is going to matter. And what's I don't want to keep it so simple, but if we're greater than $100 in oil, it's going to be constant pressure in the equities market. If we're less than, I'd say 90 or less than 80, maybe things improve. But I don't think we're coming back down to like 60, 50, 40 anytime soon. Okay. I think we might stay here elevated, figure out how this is all going to work with supply and demand. And ultimately, the world is going to be forced to move away from oil. I mean, if it gets too expensive and it's going to drive everything up in price, we have to move away from it. And I think that's what's going to be hard, is it's in everything. Okay. And so in 2 weeks' time, what happens? The ceasefire lifts. Is there more attacks? Are there more flare-ups? Very possible. So we are seeing basically a short-term relief rally on a ceasefire. The market got all excited. I think this is a way just to get out of crappy positions and get out of exposure, de-risk, de-leverage, and we will see how the rest of this market treats this week. Today FOMC, we'll see if there's any direction. Okay. But look at where we're bouncing. We came right up to past support that could become resistance. And right now it's starting to show signs of fading. Do I want to fade this move? Not really. I don't want to fade it, but I also don't think it's a terrible idea to fade it. When tomorrow comes back a little bit more normalized, we have PCE in the morning. Here's what I would love. Just give us a normal day to trade and don't give us like a 0.5 to 1% gap up or down. That's what's really difficult trading daily profitably. When it does happen, like today, the market was up 2.7% and had zero follow through, right? So was it follow through to the downside? Not really. It's right back where we opened. Did it follow the upside? No. We're still inside the same 5-minute candle when we opened. So that's not easy to trade, right? Especially out of the money call spreads and out of the money put spreads. And right now for the day, we have FOMC minutes this afternoon, but right now for the day, it is essentially a stalemate. 33% puts, 30% calls. There's nothing happening here. If this is an opening range breakout, okay, maybe the market wants to leak a little bit lower. It's still a positive day, right? Still a positive day. Would I bet the farm on like, oh, I'll sell something above the 60? I mean, I don't know. Maybe the market finishes at fresh lows. I don't know. But here's what I will say: we're right back where we opened. I'd like to think, and I'll try to find a trade this morning, but it's what, an hour and a half into the market. I mean, I'm not going to force anything, but let's go SPX. Maybe throwing out like a reasonable broke wing butterfly today. So that initially was looking at like the reverse iron condor. Right now trading for about 620. That's not bad. If it stays below 67.60, great. If it gets above, yeah, it's a big difference there. So a 25 dead zone, that's not bad. You're risking 385 to make $1.15. We just need price to either, stay lower or move back above 67.85. If I wanted to go bear call spreads right now, I mean, 6,800, where do we open up? Where was the high today? High around 90. It's like we're right above the high. You're selling like right above the high to say like prices can't go higher. I think it can. So I don't know. I'm going to keep the trade as is. I'm just going to keep that $1.50 pending order. Where's it at? Right here. I mean, it's trading for 5 cents. The most I could have made this morning was about 30 cents on my trade. So I just, the expected move box was way too high with a gap adjustment and it's way too low on the puts. Everything was super, super low delta. I'm not going to take on the risk unless price goes somewhere today. So that's all I'm doing. I don't want, I just, at this point, 11 o'clock in the morning, I'm not going to force a trade. We'll see what the rest of the day looks like. And then tomorrow's a new day. I'm hoping that we don't have another wild gap to the downside. We have news tomorrow. We have PCE in the morning. So let's see what the market does, or if it cares, or if it's CPI on Friday. We'll find out. But, be cautious of this move because we got right back up to key resistance that I'm not surprised the market is fading it right now. And if that continues to eat away at this, right? Remember on the CFD, this is one big candle that took, hours and hours overnight. But if the market just slowly and steadily chews away at this, that tells me that the bears have acknowledged, like, thank you for bringing price right back to us. We're going to sell that rally. Okay. But this is the key level. Like right now, if the market can stay above 66.25, the bulls might have some fight left in them. But if this market just fades all the way back down and takes out 66.25 or 66.15, then bears are back in control. There's going to be some ups and downs and it'll be noisy, but like all you're doing is Trump bump, market faded it, just like it did a couple weeks ago. Okay. All right. That's all I have for today. So waterfall income. Let me get a big update here out in your member portal. Engineered options looking good for a winner from this week's participation trade as long as we stay above 662 on XSP. Project Options Edge closed out the May 111 on SPY. That was for a bonus profit, actually. Let's see here. Waterfall income. That'll be so trade today on daily profit, just pending orders. I'm just going to let that hang out. And that's kind of it for me for the day. Okay, so if anybody is here watching this new, if anybody's asking, this guy talks about options all day, what about other stuff? Look, options, one of my favorite assets to trade, define risk. I become a much better portfolio manager for the last 10 years plus of trading options, incorporating that in my portfolio. Managing risk, way more capital efficient. I do have some foundational education. This quick guide is $27. This full session here for One Trade Mastery is free. If you want it, just email me. Okay. ChrisPulverPub@gmail.com. ChrisPulverPub@gmail.com. If you ever want to check out a replay of anything, of any of these services, if you want to see a replay, Dion, I think we have one ready to go for right now. But if you want to see a replay in any of these, somebody asked this morning, I think Thomas was asking about waterfall income. I asked for an email, or we can reach out to you. But if anybody wants to see like any of these services, they're all very different. They don't overlap. Here's what they look like on paper from win percentages, reward to risk. Some reward to risk much higher. So my double ups, very high very high reward to risk. Win percentage is around 60, 61%. Just the last win we had like a 75% winner on XSP. We had like a 512% winner a week before that on either, I think it was an SPX winner on a butterfly trade. So anyway, super high reward, low risk trades. Engineered options, we're winning about 90. I'm actually going to move this up now. So 1-to-1. And I'm going to move this up here because we're winning. And as a group, we're winning like 90% of our trades as a group. So I'm going to move this higher. So we have about a 1-to-1. So move that. I don't want to overlap these too much, but we're winning about 91 to 90% of our group trades. So net, we're making money. And we have a 1-to-1 reward to risk. So my win percentage is high. My reward to risk is adequate. And I'm giving myself that slight edge over 50% because we do build some profit trades in that can have a higher win than risk. So I think that's good. I mean, that makes it so we're winning more as a program, and also our reward to risk is more favorable than just a simple like, oh, I trade out of the money stuff and it's higher risk than reward. Like Daily Profit, we win 90% of our trades, but I'm typically risking 4-to-1. So I'm risking $400 to make $100, but my win rate's like 90%. Waterfall income. I'm typically risking like 400 to make 1 or 450 to make 50, but my win rate's like 95%. Project Options Edge, it's a lot of naked stuff. It's naked puts, it's cash secured puts, it's repairing trades, so the win rate's like 97%. The losses I've taken were defined risk, and I'll tend to keep it that way. But that's a more cash intensive program. Pinch Point, that's a set it forget it volatility dashboard. We trade the market a lot of times both ways. We're winning about 85, 86% of those trades. Newsbreakers is earning catalyst. This will heat up here in the next few weeks. We're winning about 71% of those trades, potentially 1-to-1 or better. Because a lot of those trades I trade both ways with earnings to get a chance of markets going, one way or the other on a surprise prize news break. Okay. All right. Aussie dollar. I don't know. I'm not going to spend a lot of time on forex right now. We've been going for 2 hours. I like dollar weakness. I've been long New Zealand dollar, Aussie dollar for the last couple of months. So my New Zealand dollar, I started to scale in around 57.50. I started stacking positions up. I hit my profit target one around 60.50. I'm going for a second leg up here around 6,300. So I'm looking to see if this area will hold support and get back to resistance. And so I'm just looking at this support to hold and scale. If I get filled on additional buy positions, I'm going to take profit back up here at 61, and I'm going to lower my take profit. So Kiwi dollar, Aussie dollar, I still like long, but you gotta respect that dollar, like the DXY, that range trade I talked about. Okay, the one trade I don't give a funding about would be dollar yen. Nobody knows what the dollar yen is going to do. I don't even think the Bank of Japan knows what the dollar yen is going to do. So I've sworn it off. I think it's going to be an interesting trade at some point. I just don't care about the yen because it's so difficult to trade. And I'll say that for, I don't know, until I give up trading Forex. I just think the yen is a wild currency pair that doesn't behave like most currencies. Dollar CAD, I was looking to get long in here around the low 3,000s. Hasn't happened yet. No fills. New Zealand Swiss, looking to see if we can carve out some lows. Still long on pound Swiss as well. Trying to get back above like the 110 handle. Euro Swiss, I'm long at these lows at 9,000. Trying to get back to like parity again on Euro Swiss if possible. CAD Swiss, gosh, even with oil up to $120, CAD Swiss is carving out some lows, but we need to break this trend line. Aussie Swiss, probably one of my best looking Aussie or my best Swiss positions right now. I'm long and I have been long. If we get back up to here, I'm probably going to make about 20,000 pips around 5,700. I've been scaling into this Aussie Swiss for a moment. This has been like a 2-year campaign trade. All right. Good stuff. Thanks, Jess. I'm about to start Jeff's stream just in case, still delayed. All right. Deanna, if you got to start Jeff's stream, that's fine. I'm ready for the stream when you are. I'm ready to wrap up here. It's been 2 hours. So we can go live stream for whatever is on deck. I think it's a double up or newsbreakers. I'm not really sure. I'm probably, I'm not going to be on Build a Trade this afternoon. We got a follow-up appointment. Baby's new and 2 days old. So we got a first follow-up appointment. But I'll be back tomorrow morning. So come join me live, same time, same place, 9 a.m. for daily profit play. Hang out. Let's see what happens for the rest of the day. FOMC today at 2 p.m. And I'll be back on tomorrow morning and we'll continue to grind. Okay. If you have any questions for me, email me, chrispulverpub@gmail.com. You want practical options. You want the expected move box. You want information on options, whatever. Let me know. Okay. Thanks, Yana. Thanks, Rick. See ya.